Hey, what's up with you guys? This is Irfan here from smartincubator.com and welcome to another video, guys. This video is going to be different. I want to show you the best scalping strategy that you've ever seen in your life if you're trading Forex. And guys, this is not something that I've never talked about. I'm talking about it literally every single day on every video that I put out. And people are literally charging thousands of dollars for this strategy, and I'm literally giving it away for free without doing anything. So this is gonna work for you, I guarantee that. You just need to backtest it a lot. You just need to practice it. There is no indicator involved. It's just pure price action on a 5-minute time frame or 15-minute time frame. But I'm gonna show you exactly what I personally do. Not something that I've read somewhere and I memorize and I'm recording this video. No, I want to show you exactly what I personally do, what time I exactly trade at, and what kind of setups I get, and also what pairs I trade. I'm going to show you literally all of them. So without any further ado, let's get into it right now. I'm going to start with GBPUSD, guys. GBPUSD is one of my favorites. So before that, let me show you what pairs I trade. I trade GBPUSD, Euro USD, gold, sometimes GGA, NAS 100, and very often US 30. These are all I trade, but most of the times I end up trading either GBPUSD or Euro USD and a little bit of NAS 100 as well. But in this video, I'm going to start my tutorial with GBPUSD and show you exactly what's going on. So the strategy I want to show you guys, it's called high probability supply and demand zones, and the other name for that is high probability order blocks, or the last name is the smart money concepts. I know you probably heard this term a lot, guys, but I can guarantee you that if you watch other YouTube videos that people talked about a smart money concepts trading strategy, they literally confuse you. Like, I watched them when I was first learning this strategy, and I literally got confused because of those tiny names that everybody put underneath the zone or above the zone. This weekly, monthly. You don't need any of that, guys. If you're a scalper, if you want to be in and out of the market in less than 30 minutes, 20 minutes, I want to show you how you need to do it. And you don't have to get fancy and then have, like, you know, fancy lines, fancy names. No. It's all about the gaps that we need to find on a specific charts. For example, GBPUSD. So what I mean by that is that, first of all, I only trade New York session, which in my time is 6 in the morning, and it's 8 Eastern Standard Time, 8 in the morning. And if you're using TradingView, you can use this tool here, sessions, that shows you all the sessions here. So the blue one is Asia session, and then is London session, and then the red one is New York session. So as I said, I always trade New York session, and it actually starts from here. Okay, and you can turn this one off, and this is exactly 7:55 in the morning, which is 8. So this is what I took on Friday. When I open the charts, it's actually at 5-minute time frame. The first thing I do is to identify support and resistance levels. We are not going to trade based on support and resistance levels. We only identify them to identify the liquidity, to see where the money is, where buyers and sellers put their stop loss around. So we don't actually accept the risk of getting a stop out, because we are going to trade according to banks and institutions and not retail traders. That's a big difference, guys. So for example, the first support level that I actually could see is this one here. Support level, support right here, support right here. I hope that you understand the definition of support and resistance levels, guys. It's super simple. You just need to find the highest points and the lowest points. So for example, this is our support level because we had a correction and then it actually bounced up. So this line makes a support level here. Same as here. It went up, came down, and then it went up again. So this one is our support level. It's very simple. This video is not about the basics of Forex, what support and resistance level. If you want to watch that, go watch my second video on my channel, which got the most views, and I talk about support and resistance levels. Okay. And this is our resistance level because this is really obvious. So this is what I do, but I don't necessarily draw these lines because I can actually see them with my eyes, but I want to illustrate them to you, that what they how they look like. So, and then I use this dollar sign to identify the liquidity around these areas. So what does liquidity mean? Liquidity means money. Liquidity means where the price tries to reach those levels and stop out every buyer or seller. So it means that, for example, let's say that right here, when the market is bullish due to these higher highs and higher lows, it keeps creating different support levels. So it means that buyers are in the game. They take their buy position here and they put their stop loss exactly below this level. They put their stop loss here. They put their stop loss here. Same as sellers. We have a bunch of liquidity around this area. And when they start selling, where do they put their stop loss? Here. So what does it mean? Why do we even identify these levels, guys? I'm gonna tell you why. It's only because of banks and institutions. They know where retail traders, the newbies, the beginners, put their stop loss. So all they try to do is to reach those levels, to stop them out, grab the money, and change the direction of the market. And that's all they do. And I used to do it for 2 years straight, and I was getting stopped out every single week for 2 years. Since 2019 that I started trading, I was only trading based on support and resistance levels. Just a generic definition of support and resistance levels, that when it hits your support, buy, when it hits your resistance, sell. See, I mean, this is something that you're watching on YouTube every day. I can guarantee you this is not how it works, because they want you to get stopped out. They want you to lose your money. So banks and institutions can easily do their job. And because if they don't have money, no money is printed in the Forex market. All is exchanged is your money and my money. If you lose, I get your money. If I lose, you get my money. This is how Forex works, guys. There's no money printed here. And that's all they do. Grab the money and then leave. This is the first thing you need to do. So the reason we do that, as I said, we want to see, we want to predict where the market is trying to go towards, so we are ready for our TP. So we actually reverse engineer that. Instead of waiting for the price to hit your support level and then buy, you need to actually sell here, but not right here. I'm not saying just sell it here, no. But your target, your prediction should be, okay, instead of waiting for this, I'm going to, if I see something like this pattern, and I find a high probability order block somewhere around here, I'm going to put my TP here. So I actually close my position here, because this is where banks and institutions are going towards, to grab the liquidity and then come down. So, but this is an easy scenario. What happens is that most of the times the price goes up, it hits this level, retail traders get in there because they see this, for example, beautiful doji candle or morning star, evening star, whatever you call it. They take their sell trade, it comes down, and then bam, stop them out. Same as here, comes down, very good momentum, it goes half away, but their TP is actually here. The price goes up to here and the bam, stopped out. This is what it is, but you want to avoid that. How? Using a smart money concepts trading strategy. So what is that? Is the gap for supply zone and demand zone. I want to show you how. High probability supply and demand zones, or high probability order blocks, or smart money concepts. And I want to show you exactly. Super simple. In order to find a high probability, let me just show you with HP, high probability demand zone, you need to find the last bearish candle before the big move, and this is for demand zone. In order to find a high probability supply zone, you need to find the last bullish candle before the big move towards downside. This one is towards upside. You know what I'm saying? I'm going to show you with some examples. In order to find a high probability demand zone, you need to find the last bearish candle, which is opposite, before the big move towards upside. And you got to see if there's any gap. I'm going to show you between the candle that happens after that and the zone that we draw. One example is here. This is 8:30. This is 8 in the morning, so it means that the New York session just started. And I was waiting and waiting and waiting, and then I noticed that we have a high probability demand zone. Why? For high probability demand zone, I told you that we need to find the last bearish candle before the big move. Where's the big move? Here. Where's the last bearish candle? Here. So you need to redraw it from the top. Sorry, draw it, not redraw it. Draw it from the top all the way to the bottom. This is our zone. Okay, but how do we know whether it's a high probability demand zone or not? You got to take a look at the candle that forms after this move, which is this one right here. Is there any gap between this candle and this zone right here? Of course, this huge gap right here. This gap alone makes this zone a high probability demand zone. See? It's very deep, guys, very important. This is a high probability demand zone. We actually identified the big move, which is this one, last bearish candle. I'm going to show you a supply zone as well, that you find the last bullish candle, and then it drops. The same scenario. You wait for the next candle to see where it starts from, and you see there is a gap between this candle and this zone, so this is a high probability demand zone. So the next thing you need to do, and you're trading according to the trend. GBPUSD right now, if you zoom out, it's kind of consolidating, but it's actually trying to create higher highs and higher lows, and it keeps creating different support levels. So we have multiple breakout structures, one breakout structure, one breakout structure here, breakout structure. So it means that the trend of the market is towards upside. We had an uptrend. And when you identify a high probability demand zone, you need to wait for the candle, for any candle. It doesn't matter, maybe it takes a day, who knows, but usually on 5-minute time frame, it usually takes a few minutes. You need to wait for it to actually tap your zone, and then you wait for a better confirmation, a strong confirmation that is actually showing you it's a good time to buy, and then you jump into the trade. So for example, we wait, and see this one, and then after that it had a huge spike. This candle is the first candle that literally tapped into our zone here. What should we do right now? Two scenarios. You can just jump into the trade, but I personally wouldn't recommend that. Or you set a buy stop above this candle, and you put your stop loss below this candle, and then your TP is 1-to-1. This trade. Look at this, guys. I saw this. I noticed that there's a huge rejection towards upside, so actually buyers push the price towards upside after tapping into this zone. And then I set my buy stop here, my stop loss here, my TP right here. Boom. One candle after that gave us a 1-to-1 risk to reward ratio trade. And this is only one example, guys. I have tons of videos on my channel that I always talk about high probability order blocks, and if you watch every single one of them, I'm showing you a different example, different setup. So this video is to help you understand the definition, the concept of high probability order blocks, how to identify them, and then you can watch the rest of my videos to fully understand what it means, because I don't want to show you hundreds of examples in one video because I already got so many videos, but this video is just to show you how it works and how we can utilize this strategy. And this is the first example that I could show you. Let's go for a high probability supply zone. Okay, and one more thing which is very important. So see, high probability demand zone, this one is invalid because it's already used. It's only a one-time use, and then we delete it. Another one right here. Look at this. Last bearish candle, huge drop, a huge spike towards upside. We wait, and we wait again. See, guys, this candle, not this one, is the first candle that tapped into our zone, but it's so close to break below this zone, and if it does that, this zone becomes invalid immediately. And this is exactly what happened. Oh, sorry. This is exactly what happened after one candle made it invalid. just delete the zone. The zone should be respected, and it should give you a good momentum, a good confirmation towards the trend that you decide to trade on. So when you have this high probability order block right here, okay, and you have this candle should be something that gives you confidence that, okay, this zone is getting respected, and now I can jump into the trade right after that if I put my buy stop above the level or below the level right here. Okay, this is very important. But when the candle after that breaks below this zone, it makes it invalid. And guess what happened? This liquidity is already grabbed by this candle right here. So it means that all these buyers got stopped out. This one is gone too. What's the next target? Right here. What's the next one? Here. There's all liquidity, and it keeps creating liquidity. One of them is here right now, and it formed another one which is here, and it's going to actually grab them later. We don't know when, but look at this. Came down, and high probability supply zone. Let me show you why. Now I want to show you a high probability supply zone. High probability supply zone, last bullish candle before the drop. Where's the last bullish candle? Here. But is it a high probability supply zone? No. Why? Because there's no gap. See, it dropped, but there's no gap. But since we have two bullish candles back to back, you need to take both of them before the drop. Now it's gonna be here all the way to up. Now this candle dropped. Now we have a gap that actually filled in right away. It still counts. Okay, and if I want to show you, no, it didn't tap. See, it didn't tap. There's a tiny gap which still counts, and you need to consider that. So you still have this high probability supply zone, and it literally came up, and then it gives us a momentum right here. Now we can take your sell position below the level, and since we have a wide zone, you don't want to put it above the candle because there's a high chance of getting it stopped out. That's why the best thing to do is just put it in the middle, and then give it some space, and then you can take your 1-to-1 here. Now you can take your 1-to-1 here. This is what I was talking about. Instead of waiting for the price to tap your support zone, support level, and then take a buy position, you need to close your position before it taps. So we are actually doing everything in opposite. This is something that banks and institutions are doing. This is something that retail traders are not doing, and that's why they're constantly getting stopped out. And that's what I'm saying. This one is very important. Look at this. Boom, 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 boom. Easy. You take your sell position here, and if I wanted to put my stop loss below the candle, I would have got it stopped out. But since this is a wide zone, I'm going to leave it here, and I still got my 1-to-1 trade. And this one is already gone. All these buyers got stopped out too. Now the next target. Where's the next target? So this one is profitable. This one is invalid because it's one-time use. And then we gotta wait for the next confirmation to see where it's going. And it's constantly creating support and resistance levels. And right now, since we have this breakout structure, it's trying to be bullish. So what do you think the next target is? This one. Where do we take it? If we see a high probability supply or demand zone, do we have one? Not now. This one is another high probability demand zone. This candle, because when it came up, the next candle never tapped into the zone. There's a gap, the gap filled. We have this momentum here, and what you can do, you can take your buy position here, put your stop loss here, and your TP here. Sometimes it works, sometimes it doesn't. It didn't. See, that's what I'm saying. If you put your buy stop, you don't get a stopped out. But if you immediately get into the trade, I would have got a stopped out. So since I had my buy stop above this level, it never got triggered, and it made this zone invalid. That's how you should play with it. And we have another high probability demand zone, supply zone that didn't work. This one. See? A supply zone, sorry. How do you find it? Last bullish candle. Where is that? Here. Do we have a drop? Yes. This one. It dropped outside of the zone. Do we have a gap? Yes, we do. Between this zone and this candle right here, there's a gap. we wait for the next candle to tap into our level. But this is a really good example for a high probability supply and demand zone that won't work. And why? Because of this. See guys, see this huge candle that had a big shadow and it broke above this zone, made it invalid. It doesn't work anymore because it didn't get respected. It should get respected, not even a shadow. It shouldn't necessarily be a candle that closes above or below the zone. Even the candle, even the shadow makes it invalid immediately. So that's why I'm saying it's very, very important that you consider every single aspect. I know it takes time, I know you're probably confused, but I'm always here for you. If you have any question, just drop your comment below this video and I personally get back to you and show you everything. But if you think that you need, more guidance, you want more examples, you want me to actually answer all your questions regarding this strategy, I also have a Fiverr gig, which is a one-on-one mentorship for only 1.5 hours. And I think it's way more affordable than other courses that you buy and you don't learn anything from them. I'm showing you literally the best strategy and the easiest strategy that you can literally use in order to find success in Forex. And I have my FTMO results as well, which you can find in previous videos. So if you want to grab that one-on-one mentorship, there's a link below in the description and you can book your session for 1.5 hours. I personally work with you and show you many examples and answer all your questions to make sure that you fully learn this strategy. So if you have any question, you know what to do, guys. And for the results of Goldie Incubator, today is Saturday, so I want to have a recap on a $1,000 account, which we are up 115% in profit since March 7th all the way to May 6th. And we also had another $200 withdrawal, which is still not popped up here because the market is closed. This is our $2,000 account, which we are up 7.47%, and our $5,000 account, which we are up 2.10%, and it's $100 in 2 days, which is absolutely crazy, almost 1% a day. Okay, that's it, guys. Thanks for watching this video. I much appreciate it, and I look forward to talking to you very soon. Have a good day.